look deep into nature, and then you will understand everything better. That's Albert Einstein. And it feels incredibly relevant for our deep dive today.
It really does.
We're exploring something pretty significant, how nature is becoming, well, increasingly central to corporate strategy.
Yeah, it's fascinating because, for such a long time, the whole corporate sustainability conversation was almost completely dominated by climate action, carbon, net zero.
Right, all about carbon.
And look, huge progress was made there, definitely, but it always felt like, maybe we were missing a really big piece of the picture.
Absolutely. And this deep dive, it's built around a great piece from the Financial Times called Nature's Place in Corporate Strategy.
Good title.
Yeah. So our mission today is really to unpack what that article is saying, digging into why losing nature is such a distinct risk and how businesses, governments, even the financial markets are finally starting to, factor nature into their thinking.
And it's crucial stuff, really, for anyone who wants to understand the big shifts happening globally right now. I mean, whether you're tracking economic trends, thinking about how businesses stay resilient, or maybe you're preparing for exams, like the UPSC, where grasping these interconnected, very current issues is vital.
Yeah.
Seeing how fundamental ecological health is becoming to the economy's future. That's absolutely key.
Okay, so let's get into it. The article kicks off by saying, look, the corporate world did focus hard on climate. And that was important.
Sure.
But maybe that focus was just a bit too narrow. The real issue it flags is this accelerating crisis of nature loss. Deforestation, biodiversity just collapsing, land and ecosystems getting degraded.
And the key insight, the really core point, is that these aren't just like separate environmental problems happening alongside climate change.
Yeah.
They pose very specific, very real risks to businesses themselves.
How so?
Well, think about disrupted operations, major vulnerabilities suddenly appearing in supply chains, and ultimately a direct hit to a company's long-term value. Just cutting your carbon footprint isn't enough if the actual natural systems your business relies on are, frankly, falling apart.
So you need something else.
You need a dedicated strategy, one that tackles nature head-on. It's become indispensable.
But, okay, here's the encouraging part the article highlights. Things are starting to change. Business leaders are beginning to weave nature into their plans in real ways.
Yeah, the piece gives examples, right? Like companies consciously thinking about biodiversity when they're sourcing materials or even designing products, or making serious commitments to get deforestation out of their supply chains entirely, and even investing directly in restoring ecosystems that have been damaged.
And it's not just companies acting internally, is it? Investors are playing a big role.
A huge role. They're strongly backing things like the Task Force on Nature-Related Financial Disclosures, the TNFD.
Right, the TNFD. What's the key insight there? It's not just about data, is it?
No, not just data for data's sake. The underlying recognition with TNFD is that nature-related risk has been largely, invisible in standard financial reports. So TNFD is trying to create a standard way to make that risk visible to the markets.
Because you can't manage what you can't measure or see.
Exactly. You can't price it, you can't manage it if it's off the books entirely.
Okay, so what's really pushing this shift now? Why this growing momentum? The article points to three key developments that are interconnected.
Right. So the first big piece of this puzzle the article brings out is that the basic economic importance of nature, its foundations, are finally becoming much clearer, more widely understood.
And landmark reports have really driven this clarity, haven't they? Things like the big IPBES global assessment.
Yeah, that was huge. And the Descriptive Review on the Economics of Biodiversity commissioned by the UK Treasury.
What did those reports actually do?
Well, they brought serious scientific and economic rigor to the table. They laid out undeniable evidence showing these deep, complex connections between, the health of the natural world and the health of our economies.
It's not just a nice to have.
Not at all. The big realization is that healthy ecosystems provide absolutely essential services, economically critical services. We're talking about the systems that regulate the climate, purify water, pollinate crops, absorb carbon, protect us from disasters.
Stuff we take for granted.
Completely. And the article stresses this isn't just for a few niche green sectors. It lists major industries: agriculture, food and beverage, clothing, real estate, tourism, insurance. They all depend heavily on these natural services.
Yet historically, the value of all that, just invisible on the balance sheet.
Pretty much, like
Okay.
an invisible subsidy from nature that nobody was accounting for, which brings us neatly to the second driver.
Okay.
Public institutions, governments, international bodies are actively trying to close that visibility gap.
So this is about creating the actual frameworks, the tools to get nature's contributions and the costs of its loss into our standard economic thinking.
Precisely. You're seeing countries like Canada, New Zealand, the EU launching major initiatives in natural capital accounting.
What does that mean exactly, natural capital accounting?
It's about systematically tracking the condition and value of the ecosystems,
Mhm.
the forests, the wetlands, the soils that actually underpin their national or regional wealth. Think of it like accounting for infrastructure, but for nature.
Okay.
Then you've got the UN Development Program pushing biodiversity finance, figuring out how to get capital flowing towards nature protection. IPBES is even doing a specific assessment just on business and biodiversity.
And there's a global standard mention.
Yes, the UN System of Environmental Economic Accounting, the CEA, that's critical. It provides a standardized method, sort of like a common language, to start embedding nature, its assets, the services it provides into national accounts. The idea is to help policymakers and markets finally factor ecological health into major economic decisions.
Okay, so clearer economics, institutional frameworks. What's the third piece?
The third key development is the emergence of market-based ways to invest. Mechanisms designed specifically to put a value on nature and incentivize actions that help it.
Ah, so this is where finance gets innovative, creating actual markets or financial products linked to nature outcomes.
Exactly that. The article points to some examples, like in Australia, they're developing a biodiversity market. Landholders can earn certificates for improving biodiversity on their land and potentially trade them.
Interesting.
In England, they introduced mandatory biodiversity net gain B&G for most new developments. Basically, developers have to ensure their project results in a 10% increase in nature value, often through restoration work, though the article notes there's been some review of that for smaller projects.
Okay.
And while they're still pretty new, you've got pilot programs in places like Costa Rica and Colombia testing out biodiversity credit models. The idea is to reward conservation efforts with credits that could potentially be traded.
So these are like carbon credits, but for biodiversity.
Sort of analogous, yeah, though the specifics are complex. And beyond these market structures, we're seeing real money being raised specifically for nature.
Like what?
Well, HSBC and Pollination launched a billion-dollar natural capital fund that's aimed at reforestation, land restoration projects, mainly in Latin America and Asia Pacific.
$1 billion is significant.
It is. And Morova, another investment manager,
Huh.
is using blended finance mixing public and private money to lower risk for a fund that supports things like regenerative agriculture and sustainable forestry, especially in the global south.
And new types of bonds, too.
Yeah, echoing the green bond market, the Nature Conservancy is developing nature-linked bonds. These are interesting. The interest rate paid, or maybe the principal, could be tied to achieving specific biodiversity targets or improving ecosystem health. It's all about creating financial pipelines directly linking investment to tangible ecological results.
Okay, so you've got this momentum building.
Yeah.
Clear economics, government action, new market tools. What are companies actually doing differently on the ground because of all this?
Right. The article highlights that more and more companies aren't just aiming to, stop harming nature. They're actively trying to contribute to improving biodiversity and natural capital.
Now, what does that look like?
Well, one big area is rethinking supply chains. You see examples like Unilever, General Mills, Grupo Bimbo really scaling up regenerative agriculture. That means farming practices focused on building soil health, boosting biodiversity on the farm itself.
Okay.
Others, like VF Corporation, they own brands like the North Face or Allbirds, Patagonia. They're deliberately using more bio-based materials in their actual products.
And what about measuring this stuff? Is that happening?
Yeah, some are building the internal tools to measure and even value their nature impacts. Kering, the luxury group, developed what they call an environmental profit and loss account, trying to put a euro figure on their environmental footprint. And companies like Wholesome, the cement giant, are using platforms like IBIBIT, the integrated biodiversity assessment tool, to specifically check for biodiversity risks at their operational sites. It's about making these impacts visible internally financially.
And direct investment in nature itself.
Definitely. Natra, the Brazilian cosmetics firm, has initiatives deeply linking forest conservation in the Amazon to the livelihoods of local communities there.
Makes sense for them.
Or Brown-Forman, think Jack Daniels. They're investing in restoring white oak forests, which are absolutely crucial for making the barrels they need for whiskey.
A direct supply chain link.
Exactly. And in the UK, a dairy co-op, First Milk, is working on turning farm waste into biogas and actively sequestering carbon in the soil on their members' farms. So these are real examples connecting business needs directly to ecological health.
Now, the article's careful to point out this progress, this momentum, it's not happening in some kind of perfect smooth environment. There's turbulence.
Absolutely not. It's happening against a pretty challenging political and cultural backdrop. There are significant friction points.
Like what?
The piece mentions, for instance, the termination of the National Nature Assessment in the U.S. under the previous administration. That sent a signal. In Europe, even the ambitious EU Green Deal is facing political headwinds, especially the parts focused on nature.
I remember the nature restoration law had a tough time.
It barely scraped through the legislative process, and the EU's deforestation regulation has also run into opposition from some member states. So it's not straightforward.
And then there's the whole ESG backlash thing.
Right, that wider backlash against environmental, social, and governance issues in the corporate world, which often gets framed politically. It's causing some companies to maybe rebrand their sustainability efforts or even quietly scale them back a bit.
So there's a risk here.
There's a definite risk that nature strategies, especially if companies only see them as being about compliance or, managing reputation, could become sort of collateral damage in this more politicized environment.
But despite all that, the political headwinds, the cultural pushback, the article argues the underlying trend is still there. This shift is happening.
Yes. It reiterates that the fundamental shift, moving beyond just carbon to a sustainability approach that explicitly centers nature, is gaining real traction.
And the tools we mentioned earlier help with that.
For sure. Tools like Encore, the Global Biodiversity Score, assessments aligned with the TNFD framework, they're giving companies increasingly sophisticated ways to understand precisely where their business depends on healthy ecosystems and where it impacts them.
So things like natural capital accounting, reporting on biodiversity, they're becoming more than just ticking a box.
Exactly. The article frames them as becoming essential strategic tools. Tools for building resilience against future shocks, for spotting opportunities for innovation, and ultimately for ensuring long-term competitiveness in a world that's inevitably going to be shaped by ecological limits and realities.
Okay, so looking ahead then, what's the ultimate vision here, according to the article?
Well, the vision it lays out is that properly integrating nature into business isn't just about managing risk better or finding a few new green opportunities within the existing economic model.
It's bigger than that.
It has to be part of a much larger economic transformation, a fundamental reorientation of industry itself, moving away from being purely extractive towards models built on regeneration. The article suggests a path forward that's both viable and scalable, is what it calls a bioeconomy.
A bioeconomy.
Yeah, an economy built on harnessing ecological productivity sustainably, using principles of circular design, eliminating waste, and, crucially, based on inclusive stewardship involving local communities.
So what does that mean in practice?
It means that things like restoring ecosystems, improving soil health, protecting forests and watersheds, they stop being sort of sideline environmental projects and become absolutely core business strategies, integral to how value is created.
And the companies that really get this, that embrace it.
They won't just be playing defense, trying to stay ahead of the next regulation or dodge the political backlash. The argument is they will be the ones actually defining the next chapter of corporate sustainability. Building value that's genuinely rooted in living systems, focused on creating long-term prosperity that's shared with and depends on the natural world.
It's quite a powerful vision, actually.
It really is a fundamental rethinking.
So as we wrap up this deep dive then, what we've really seen is how nature is moving, maybe slowly, but definitely, from the fringes right to the core of business strategy.
Yeah, driven by that clearer economic understanding, backed by institutional efforts, spurred on by new market tools.
Even with those political challenges humming in the background.
Exactly. And understanding this shift, this whole complex dynamic, is just fundamental if you want to navigate what's coming. Whether you're tracking business, thinking about policy, or yes, even if you're studying for exams like UPSC, where this intersection of economics, environment, and governance is so critical.
Right. It's essential knowledge for understanding the future landscape. economically, socially, environmentally.
Hmm.
Which kind of leaves us with a big question to ponder, doesn't it? Given that political turbulence we talked about, the short-term focus of political cycles, and then this undeniable long-term economic reliance on nature, how is that tension going to play out? How will it shape the future for business, for society?
That's the multi-trillion-dollar question, isn't it?
And maybe thinking about what role you, our listener, might play in that evolving picture.
Absolutely. If this deep dive sparks some thoughts, maybe raise questions relevant to your work, your studies, or just how you see the world, we'd genuinely love to hear from you.
Yeah, definitely. Please do consider liking this, subscribing for more deep dives on really critical topics,
Yeah.
and drop a comment below, share your thoughts, ask further questions. We do read them.
And just to remind everyone, this discussion was sparked by that really insightful article in the Financial Times.
Great source. Well, thanks for joining us for this deep dive.
Thanks for listening.